You're such an asshole.
AssholeConsulting.com, continuing testing Dailymotion as a video platform. I'd like to report it really sucks, and I said I'd do it for a week, and I'm really kind of regretting it because it is just so inefficient. It is not. They literally just shat out a platform. Let's run with it, and you can tell they are just not putting any fucks into it. They could prove they got monetization. They have all the logical capitalistic things going on, but then it's like, fuck the user, we don't care. Let's eat some cheese because it's a French company. Get the joke? Cappy, time is money. Excuse me, so I'll do my best to keep this brief. Basic information about myself and my current financial situation. I'm 29 years old, single, no children, and had the foresight to take advantage of the housing market crash and purchased a house for a very good deal at around the age of 25, and now I have no house payment. Look at that guy. Look at that. Huh? As well as no car payment. I'm debt-free and day after day inching further and further into minimalism. I earn roughly $60,000 per year from working. Look, this guy's got it, $1K per year through dividends and work as a freelance ghostwriter in my spare time. He's living the dream. He's got no debt. He ain't got no wife. He ain't got no kids. He's not even 30. Got the house paid off. You gotta worry about fucking this up now, kid. I know this isn't what you're asking about, or maybe you haven't gotten to the rest. Just don't tell women you got that house paid off. You never tell women you own your own house. You never tell women you don't have no debt. You always, oh yeah, times, yes, tough, difficult, yeah, tighten belt, pinching pennies. I just went to the bank to pinch some pennies together, so I feel better about myself. I'm 10 years into working for a major place, I'm not going to say, involved in the distribution operation. That is a company that, as a benefit, provides stock to all of its employees, and as such was my first introduction to things like the stock market stock splits, dividends, etc. First question, my company stock is currently private, although I've been told that within the next year this stock will go public. Sure. Did they come out with a public release saying they intend to take the company public? Did management say that? Because if management said that, fine. If it's Bill over at the loading dock, fuck Bill over at the loading dock. I'm unsure whether this would be a good thing, a bad thing, or neutral. What does this mean for me as a stockholder? Well, it typically means good things. Let me explain to you private versus publicly held companies. A privately held company is, that's it, it's privately held. A handful of investors or just one investor owns all of the shares. And if you want to buy those shares, you have to buy it directly from that person. It is a private company. The financials are not known about it. It's not a public company where you have to register with the SEC. And these stocks, the shares of your company's stock, they are not offered on a public exchange like the New York Stock Exchange or NASDAQ or any one of a number of other exchanges. All right, so it is a privately held company. And if people say, we want to know how much you make, they say, fuck you. What are you paying your corporate executives? Fuck you. All right? Now, why would a company go public? Right? The reason a company would go public is because it wants to have access to more money that it needs to borrow or raise in the financial markets. And when I'm financial markets, I mean a market where there are finances. You go to the market to get money. Now, sometimes you borrow money, so an investment bank will issue bonds on your behalf, so it's nothing more than borrowing money. They just call it bonds. But the other one is when a company sells shares in itself. So it issues shares, and you have an initial public offering. And usually that is done for two reasons. The second reason is for the benefit of the company to raise money so it can go on an acquisition binge. It raises money so it can build factories, it can grow. The primary reason they do it is because when you list your shares on a public exchange, it becomes more liquid. And that means as opposed to limiting the number of investors that can invest, no, it's a private company, you can't invest. Nope, we have to approve you first before we allow you to buy this 1% share. What you now do is you open up to the world all 7 billion people on the planet, including all the rich people, institutional investors, insurance companies, and pensions and hedge funds, to buy your stock. What's the big deal about that? Well, now the demand for your stock just went through the roof. So what you really do, if you're smart, you sell 49% of your shares in the IPO, and you never sell any more. And then the CEO and founder, like Bill Gates, keeps 51% or 50.1%. So you don't lose control. You're like, I own the whole fucking thing. Fuck all of you. I don't care what the board of directors says. I am your king. You're still king. But you sold 49% of the shares of the company, ownership of the company. You raised billions of dollars. And your 51% of shares that you still hold go up 10 times that of what you would be having in a private. Not really 10 times. But what you've done now is you've increased the value of your share ownerships. The shares that you own. You've also allowed it so that you can sell your shares or raise money much more quickly because now it's more liquid. Now it's a publicly traded firm. Like, a share of IBM that's liquid, meaning you can buy and sell out of it very quickly. It's not like there's not thousands of people buying and trading IBM. But a small private company, it's like, who the fuck is this company? Can I sell this on the public markets? No, I can't. I got to go find another individual, and you guys got to approve it? Who's going to buy that? So now it becomes much more liquid. So the official reason is you go public to raise money to expand, to go national, to go international, to buy another company. All right. But probably the overriding reason is the owners of the company would like to be able to sell their shares in their company sometime, and to help drive up the value of their shares, not to mention raise a ton of cash, they go public. So it's a good thing. So what will probably end up happening if they do go public, your private shares, there will be an IPO, and then I know you don't own 5% of it. Let's say you own 5% of the company. The company will raise a certain amount of money. You will be issued these new shares that represent 5% of the ownership of the company that are publicly traded shares. And then you can watch the value of your shares go up and down on the internet because it's on the stock market. It'll be traded with a ticker symbol and everything else. So it is a good thing. I mean, if you can get pre-IPO private shares in a company that intends to go public and will grow, that's great. You're on the ground floor is what that is. So that's not bad at all. All right, so that's a good thing. It's a good thing. I'd be a little bit worried if it's like WorldCom, if you remember those guys where they're saying like, oh, all your 401ks are invested in the company's stock. Like, that's bad because that's not diversified. The company could be ran into the ground. But if they're just giving you like profit sharing and it comes in the form of private shares, that's great. Hell yeah, I take it. Nothing wrong with that. I know the company you're talking about, and they are large. I thought they were publicly traded, frankly. So it would not surprise me if they go publicly traded. So, all right, so we have that. Second question. I'd like to learn more about stock investment to the end of eventually obtaining enough dividend income to live off of, or at least complement my income as a ghostwriter. That being said, I would like to diversify my investments by purchasing stock in several companies. The problem is, despite my research, I can't actually find how to begin. Simply put, where is it I actually go to invest the money? I've looked up online and turned up low. Perhaps I'm looking in the wrong place. Well, you just set up a brokerage account. That's where you go and you invest in stocks. But now you're getting into the world of investing, and let's hold off here and go through a couple steps. One, if you want dividend income, there's two ways you can do it. It's stocks or mutual funds. All right? Stocks are the only securities out there that pay a dividend. All right? Bonds pay interest. Stocks pay dividends. But you can also get mutual funds that are composed of dividends, or stocks rather, and then all the stocks pay dividends and the mutual fund pays out a dividend. So you're going to be looking at equity only, stock only, mutual funds, or individual stocks themselves. Now, how you go and invest in that, you can go online and you get yourself an online brokerage. We're talking E-Trade. Is that even around? I think E-Trade. No. Did they go TD Waterhouse? TD Ameritrade? No, it was Ameritrade with TD. There's King Trade. There's eSchwab. There's a whole bunch of different online brokerages that you can go online and trade in. You can buy mutual funds. You can buy stocks. You can also then go ahead and what I'm personally doing is I go through robo-advisors. As you guys know, I have a sponsor. It's called Betterment. I have an affiliate marketing campaign with them. I endorse those guys, but they only invest in indexed funds. So that's a little bit of different. That's more retirement planning. So you sounds like you want to have like your own. So Betterment would probably not be for you, but down the road, if you're looking for IRAs, that's something to go to. But you need some kind of brokerage account set up that allows you to go buy stocks and bonds. Now, how to analyze stocks and bonds and mutual funds, the old captain has two classes. And in your particular case, I would very, very, very strongly recommend it. Not just because it's going to make me a lot of money. Well, it won't make me a lot of money. I'll make some money. But it is exactly the class you're looking for, and that's called the Analysis and Valuation of Stocks. That will teach you everything you need to know about fundamental analysis, how to read an income statement, how to read a financial statement, how to read a balance sheet, looking at cash flow, how to read value stocks, how to outside external factors, industrial comparison, industrial ratios, the cash side, all this shit. All right? It's called The Analysis Evaluation of Stocks. You can find it online. Take it online anywhere. Try to find it cheapest. The prices vary. Offered through different, like hundreds of different community school programs and stuff like that. That is a class specifically designed to teach you from nothing to being able to analyze and value stocks. Right? It takes a lot. This is a 6-week course. It takes a bit. It's not like this is you just watch one video and you're done. You got to learn accounting. You got to learn financial statement analysis. There's a lot of stuff that goes into it. But that's how you would do that. Now, the problem you're going to face, I mean, even let's say you go, you learn, you understand everything in it, and you set up a brokerage account. The problem you're going to face, though, today is that there's so much money flooding the market in terms of retirement dollars, in terms of borrowed money from corporations, in terms of foreign investors who are using the United States stock market as a place to park the money for safety reasons. This has driven prices so high that the dividends that these stocks pay relative to the price effectively are only earning you about a 2% rate of return a year. So in other words, what I'm trying to tell you is you're going to need a lot of stocks and mutual funds to build up the income that's going to pay you. So what? You need for 2% a year. That's a year. So if you had a $100,000 portfolio and you had the average S&P 500 stock or mutual fund portfolio, you'd be making $2,000 a year on a $100,000 portfolio. So you're going to need a shit ton of money to invest. So I would probably start advising looking for other. Now, this doesn't talk about capital gains. The price can go up. But if you're looking at dividend income, getting that monthly check, you're going to have to find something that pays a higher rate of return than 2%. And where is that? Without getting into higher risk, we don't know. Quality bonds pay very little because they can. Stocks are paying very little because we've driven up the prices so high. You have to start getting a riskier and riskier investments or do peer-to-peer lending. Engineered Truth, Matthew Tran. He put together a video on peer-to-peer lending, and that's where he's finding about 6 to 8%. But, there's risk involved. So that is the problem, that there's no economic growth, so there's no real big increases in profits or desire to invest or expand on the part of corporations. So what's driving the stock market now are just cash flows. How much money did we print off, and it's dumped into the market. So it's being driven by the supply of money, which is called hyperinflation. Even though everyone's like, the stock market went up, that's good. It's like, yeah, unless you've never bought into the stock market, like everybody under 50. So that's the problem you're going to face like that. But yeah, where do you go to actually invest the money? You find a brokerage, online brokerage. Third question, for someone my age and financial standing, how much and what variety of stock would you recommend? I don't necessarily aim for becoming a big shot 7-figure investor, although earning $20K or so in yearly dividend income would be great income supplement that might allow me to drop down to the 50-hour per week. Yeah, so if you need $20K, you need $1 million. That's how out of whack the prices are. And grant me the time and freedom I'm after. Is this feasible? Yeah, you got $1 million, then you can get yourself $20,000 a year on your average dividend yield in the stock market. Is there anything else I should know about the stock market investment as far as taxation or dividend reinvestment is concerned? For a young guy like you, why do you need this income? Usually you wait for your dividend income to come in when you're older. So a DRIP is what you're looking for, a dividend reinvestment plan, and that's optional. That's an option that every online brokerage should have. It just basically, you get your dividends, why don't want it, and it simply reinvest it back into the mutual fund of the stocks that the dividend came from. Any other information? So what variety of stock would I recommend? I do not give specific financial advice. That is the one thing I cannot recommend. All right? But what I would say for you, where do we go? You got your house, debt-free. What I would start looking at is you have no debts. What I would look at in terms of investing is two things. One, do you have all the education you want? Because now is the time, if you want to get your master's or get a trade certificate or something, that's where I would invest your money, because that is going to increase your wage down over the course of your life. And that's going to pay a higher rate of return than your 2% dividend yield. Do you have entrepreneurship? Is there something you want to start on the side? That's where you're going to get really good rates of return. And you may not be the entrepreneurial type, and if that's the case, fine, don't worry about it. But I would start looking into, because here's the thing, like everybody invests in the stock market. So there's no real great opportunities for income generating potential relative to the prices you got to pay to own that stock or that mutual fund. So what the real money to be made in is entrepreneurship, income generation, not capital gains. So if you had a business idea, I would start thinking about that. All right. And then if you don't have that, then it's like, okay, well, then if it's like standard routine would be go and invest in your IRAs, lower your tax bill. Invest in a Roth IRA so that you have perpetual capital gains off into the future. That's the next step. But what those underlying investment securities are, I can't do that because I am not a licensed financial advisor, and I would never recommend any kind of investing because then you could sue me, all right? So I can't tell you that, but what I can tell you is that if you look at interest rates and dividend yields, that's the dividend rate of return relative to the price, there's around the 2Z, 3Z%. And if you got a good business idea, good. That's where I make my money. Like I really have a hard time investing in an IRA because I can spend money on advertising and make a lot more money on books because I have my own product. And so that is what I'd recommend for any young individual that has extra money and is in your situation, has no debts. Like if you have no debts, what's next? The next step is you got to figure out, is your retirement going to come from the stock market where all the other sheep and lemmings are investing and driving up prices, or is it going to come from entrepreneurship? Or both. Nothing wrong with throwing money into the stock market, to get that tax deduction. Just as long as you know you could lose it all the very next day. All right? I understand that. And there's some arguments and cases that because the world sucks relative to the U.S., all the money's being flooded into the U.S., so it provides a little bit of stability. But I'm sorry, I got better things to invest in than the S&P 500 index. That's myself. So either through education or entrepreneurship, a skill or a trade or something, I'd start looking into that. So, anyway, hope that helped out. You guys got questions from the old captain, shoot me an email at asselconsulting.com. I'm on Praxi, the Praxi app, Praxey. Install that on your phone. If you need to contact me in an emergency crisis situation, Asshole Consulting, you can Praxi me. It's like FaceTime. I'm on the phone. And it's not free service. It's a charge service. You pay a lot. But you don't pay as much for Skype. I was like, I'll give this a shot. It's a really cool app. Check it out. If for any other reason, just check it out. It's kind of cool, actually. So we'll talk to you kids later. Toodles.